Well, back to oil prices. Oil prices surging after OPEC Plus producers made an unexpected decision to cut oil output by more than 1 billion barrels per day, or 1 million barrels per day, on top of the 500,000 daily barrels that Russia announced it's cutting last month. Joining us now to discuss everything oil and the energy world is the Energy Word founder, Dan Dicker. Dan, great to have you here with us today. So first and foremost, this was a surprise decision by OPEC Plus here. What was some of the reasoning that they put forward behind it?
Brad, this is part of what has been a very slow-burning Cold War between basically Saudi Arabia or OPEC Plus, really the same thing, Saudi Arabia and OPEC Plus, and the United States, Joe Biden and the Federal Reserve, who have been targeting oil prices basically since the summer of 2022. And there was, the response to this by OPEC Plus is with the only weapon at their disposal, and that's production cuts. They put together a 2 million barrel a day production cut last year in November. And although this came as a surprise in terms of the timing, even in November, I came on your show and I said that it wouldn't be unusual if that wasn't the last salvo that the Saudis kind of launched at this, this war between trying to support oil prices that really don't have a fundamental, imbalance going on in terms of demand, but yet prices have been forced down by releases from the Strategic Reserve and also from, kind of endless cuts from the Federal Reserve.
Dan, I remember your call from last November. Is it possible there will be another salvo? I'm looking at some of these production cuts, and especially this latest one, as potentially very well timed, at least in terms of technicals. Oil had just broken down below the $80 per barrel level, and then it shot back up above. And then you take into consideration the commitment of traders' reports, how large traders were, positioned coming into this announcement. It looks like the market was due for a short squeeze. Could we see another opportunistic, timing announcement like this in the future?
Jared, I think you have this 100% right. I couldn't have said any of this better myself. There's been a general kind of fear from traders of getting long oil. And so there's been just a natural kind of, lack of length in the oil market, which makes, the oil market, ready for this kind of huge pop based on an announcement like this. Now, I don't think the Saudis, play that big a game in terms of, the speculative interest in oil markets like we do, or I do for sure. And their only thought right now is that, there is an economic kind of question in front of them. And it's really simple. What should we do in order to retain the profitability of the barrels that we're pumping? And how can we keep prices at a level that'll do that? And so it's really simple. If you're pumping 11 million barrels at $70 a barrel, that's $700 million a day that you're getting. And if you can cut your production by 1 million barrels a day, but get oil prices up to 80, then you've got 10 million barrels a day at $80, which is $800 million a day. So basically, it's a little bit more money, and you're working less hard, and you're making the same profitability or even more. So, in every way, this is sort of an economic question for a country that relies 100% on oil revenues in order to survive. So, in the end, that's the only calculation that OPEC will make going forward. Will they have another cut? Yes. If prices go low enough, they'll be forced to have another cut like this. And if they go high enough, they will start to lessen these kinds of production cuts. But it's going to be that kind of war between what the Biden administration, the Federal Reserve, can do with monetary policy and also with a strategic reserve, opposed to what OPEC Plus can do with flat out supply.
We're talking about a time of the year, Dan, too, where people are, being more mobile. They're getting out. They're traveling more as well. We were just taking a look at the gasoline futures. They shot up by about 3%, as well as the share prices for all of the major kind of oil and gas companies here in the U.S. Did the summer travel season just get that much more expensive for any passenger or traveler as well, given this decision?
Yeah, we've already had a very kind of deep capacity in the refining sector anyway. So you've seen gas prices stay, sticky at around $3.50 a gallon, despite the fact that oil had gone under 70, at least briefly. So there's a refining capacity problem in the United States. And yes, of course, whenever you increase the price of the base product, crude oil, that goes into making gasoline, it's going to get worse. But again, there is a refining issue that needs to be solved on top of the issue of supply, which right now is ample here in the United States. But again, it's the shortfall on capacity that may be a problem going forward, depending on what kind of driving season we get in the summer.
And Dan, anytime we have a move in this direction by OPEC Plus supporting oil prices or increasing them, a lot of times there is pushback by the U.S., either by the administration, other groups. I'm just wondering in terms of what there might be in terms of any pushback here that you see on the horizon. Also, the SPR, the Strategic Petroleum Reserve, there had been calls for filling that with oil prices that had been reduced. They're still at lower levels within the last couple of years range, but off of their lows here. Just wondering how you view the U.S. response to this.
Yeah, it's a very interesting question. I don't know how much more that the Biden administration can do. The Strategic Reserve, if you're going to maintain the mandate of that Strategic Reserve, needs to get some fillback happening at these lower levels. And Granholm has already said that they're not really interested in refilling the SPR. Now, personally, I don't find that to be a bad decision. I think the SPR has long outlived its usefulness, and the United States should get out of the business of buying and selling oil when it suits them. But that being said, I don't know what else can be done. I don't think there's a ton of barrels left to be released from the SPR, although I don't put it past the Biden administration to empty the SPR further. Again, this is a Cold War that's going to go on for a little while, and the Biden administration is has been very successful in keeping energy prices low, despite the fact that demand has basically stayed pretty much the same. So I think they'll do more of the same. I think this puts a little more speed or a little more heat into the Fed cutting again in May, and maybe even another cut after that. These are the prime weapons that the United States has in keeping oil prices low. And I think that the United States and Joe Biden are going to use them.
A very good point there. Just a reminder that elevated energy prices, another recession factor there. Really appreciate your insights. As always, Dan Dicker, the Energy Word founder.